What is the why behind those moves?
So look, we're assuming with that 3,800 for this year that we were going to get some stability around this 3,500 mark, where the market, and we've described it as a battleground. We've seen it tested a few different times this year, and it actually marks a median recession drawdown if you go down to 3,501 on the S&P 500. So we thought markets were going to try to make a stand in here. We'll see if that ends up being the case. Of course, there's always downside risk to this view. But one of the things we had talked about was just the idea that valuations have been starting to look a little bit more reasonable. I wouldn't say cheap. But the other thing we've talked about, frankly, is the midterm election. In a midterm election year, this is typically when you start to see a bottom in the market and see things rally back. And on average, you get about a 7% rebound into year end, which takes us pretty close to that 3,800 target. Now on next year, we think it's a back end loaded forecast. We think things are going to stay pretty volatile into the first part of next year. The earnings band-aid probably doesn't get ripped off until March or so. And we do think there can be some multiple expansion as inflation rates come down, but we do think that's really more kind of a back end year type move. So, we think there's going to be recovery, but it is going to be painful for a bit longer, we think.